Welcome once again, my friends. Okay, I hope everyone can hear me. Okay, thank you, Hygia, for that confirmation. So, our webinar for tonight is about mastering the pullback entries. Okay, welcome to everyone again. Archangel John, Nani, Mr. Nani, Nora, and Faye. Welcome, and I hope more will join us as we go on. Okay, so we will just review what we've already discussed many times in the past because, you know, we all want that sniper entry, right? Like, where exactly do I enter the trade? Yes, you are looking at the chart, okay, from the morning till the afternoon, maybe even in the evening, and still you don't know how to enter the trade. That's why we're going to discuss this. I hope there will be more secret sauce again, because when I was uh, when I was still new in trading, I was once like you. Like, I'm spending more than 10 hours a day in front of the computer, the phone, everywhere I go. Even if I'm driving, I have to look at the chart, which is not advisable. It's dangerous, but you got what I mean. Yes, when you are new and you have passion to trading, like, there's no day that you will not look at the chart, because there's a saying, fear someone who master one technique or one thing. It's okay. That person is better than the one who does not do the same. Okay, so if you master, like, no, just patience, you master this, and everything will fall into place. Just like that motivational video you are watching. It's all about patience. You need patience. Yes, we need to wait at the right time, because once you enter the trade, then just wish for the best. If you don't know what you are doing, because you are just entering blindly and there's no confluence, no confirmation whatsoever. You just want to, guess, and which we don't like. So, for tonight, it's all about the pullback. Okay? As you all know, my friends, if you will go to the chart, for example, okay? Okay. Price goes up, then there's this pullback. It has to pull back. It cannot just go in a straight line to the moon forever. It's coming waves, up, down, up, down, up, down. So, where's the pullback? This is the pullback. To be clear for everyone, huh? Where is that? This is the pullback, my friend. This area here, that's a pullback. This is another pullback. All right. This here. Eh, okay, if it's an uptrend, this is this. But in a uh, in a downtrend, it's the other way around. Okay.
Sila man
Down.
imo.
So
Mo.
where is the pullback? This is the pullback. Sorry. This is the pullback. This this
Oh,
area
safe, okay.
here.
Pagkadako lang nila.
This area here.
Kana gamay, basig dito na kay gamay. Dili kay ba ang kaningon ani? Safe lang yung
Excuse me, Faye. Can you mute yourself, so we will have a good webinar for tonight? Yeah. Okay. Thank you. I hope you muted yourself, huh? Thank you very much. Okay. Now, moving on. So, the pullback, huh? What I'm talking about. This is the pullback when you are in an uptrend, and this is the pullback when you are in a downtrend. So, Why pullback entries work? Did you ask that to yourselves? It's just a pullback. No, a pullback is the time to get ready, to get things set up, to get all your confluence ready. And once it gives you the signal to enter, then that's it. You will pull the trigger and ride the trend to its intended direction. That's why it matters, my friends. Huh? So market structure and pullbacks, the tools we need to use to spot these pullbacks. Okay, well, when I say tools, no, what are the tools? What are the tools? Any idea when I say tools? What does that mean? Anyone? So when we indicators to be used. Okay, Hygia. Okay, no, tools is another thing. Okay, in the indicators is also another thing. So when you say indicators, okay, what are the indicators? Okay, let's check. Okay, these are the indicators: the stochastic, volume. Okay, moving averages. Those are indicators. Okay, because they are there because of the coding that they have. Okay, this is the algorithm. Why this EMA? Okay, this is the what? This is the 20 and the 50, I think. This, yes, the 50 and the 20. Okay. Why does it going down at this time? This one is going up because it's already calculated the number of candles, 20 and 50, and that's why by this time there's the equilibrium there. They cross over, so that's the average price, and that's why they cross over. Those are the indicators. Okay, indicators are like that. Stochastic. Okay, when we show the stochastic in the MACD, okay, they're there. Okay, it's all in the coding. So tools, when we say tools in trading, okay, it's this trend line. Okay, trend line going up. That's your tool, my friend. This, you need to mark your support and resistances. You have your box tool here. So like that, mark your support, something like this. Okay. So those are the tools. So many things with the arrow, whatever, just to, to guide you in your trading. So that's the tools, huh? Okay, I hope that's clear now. Okay. Okay. So welcome Jessa for joining. Joseph J, Leon. Thank you again, my friends, for joining our webinar tonight. Now moving on, the entry techniques, okay, how we will enter in the trade to have that sniper entry as much as possible. Okay, we cannot be perfect, but we only trade what we see. But there's some way to do this, okay, based on our previous lessons and everything. And the risk management, okay, in the pullbacks, how many lot sizes you need to use based on your capital. It's common mistakes. And at the end, we will have some live examples how to do this properly. All right, my friends. So let's move on now. Oh my God, time is very fast. Okay, with secret giveaway alert, as you know, this is our very famous 50% deposit bonus where you will have 50% extra on your deposit. So if you deposit $100, you will get 50, $500, you will get 250, and if you deposit 1,000, you will get $500 more. Very nice, my friends. Huh? So avail, contact our algorithm managers, and they will gladly to assist you anytime you want. So please avail this as much as possible. I hope you have availed already, or if not, you can always spread the word to your friends, your family, and avail and benefit from this giveaway, my friends. All right. So I hope you will reconsider. Now, mastering pullback entries. Okay. So these are all the agenda we need to discuss. It already showed you. So what is a pullback? It's a temporary counter move against the main trend. So a counter move against the main trend. So when you see this one, okay, where's the pullback here? This is the pullback. This is the pullback, this area here, okay? Because it was in an uptrend and then went down. So that's the pullback, okay? What else? This is the pullback. So that's very big. I hope you get the idea. This is the pullback going down, and in a downtrend, this is the pullback going up. Okay, so that's the difference between these pullbacks, huh? Okay, now it provides an opportunity to join the trend at a better price. Yes, of course, because when you look at the chart, what do we always say? Buy low, sell high. Buy low. So where is this the low? No, this is the high. So you buy low to go there to catch the other move and sell high. Where is the sell high? This is the high. So you need to sell here to go down there. But you will not sell here going there. You don't know. If you see this pullback, I have to wait, let the pullback finish. And before I can enter this, so I will enter here. I will get my short position. Okay, I see something there. No, something there. It could be an engulfing candle. Okay, maybe it tested the 50, the 20 there. The 20, it bypassed the 20, it went to the 50. So maybe it will reject the 50. Then I can enter from there. Those kinds of things, you need to just talk to yourself. Where will I enter now? Sometimes you are like that. Even for me, I'm talking to myself. Well, where do I enter? Just, to get the boring mood out of the way. All right. So key to trend continuation strategy and some key to trend continuation strategies. So okay. So why pullback entries work? Because markets rarely move in straight lines. As I've said, no market cannot just go straight forever like an arrow. No, it comes in waves. It comes in waves, right? It comes in waves like this, like that. Okay, whatever. So that's it. And institutions accumulate orders during the pullbacks, which is true. Okay, because if you will see here in the chart, okay, so as I said, price cannot just go straight forever. So there's a pullback, and somewhere around here, why do you think price went sideways here? Why? Did you ask that? Did you ask that to yourselves, my friend? When you see such thing here, okay, because you see, this is also in a sideways. Before it went to the last push, there's a sideways movement here, okay? Because now sellers stop to step in. Okay, they will try to push the price down. So it created a what? At this point in time, okay, buyers and sellers are fighting each other there. Okay, that is the area of interest. Okay, they are interested here. Okay, interested. Okay, for the last time, sellers tried to push this with this bearish engulfing, but no, buyers are there to protect this area. And from there, price went up now for the last push. That's it. That's all it is. And you will see this kind of price action oc- anytime in the chart. Okay, for example, here, why price went up there? Always look to your left. Okay, there's something here. There's something happening there. You see, there was a resistance there. The sellers are trying to push the price down at some point in time here, but they managed to go there. Okay, buyers managed to push the price up, and it went up. Then finally, sellers, okay, protected this area. Okay, a lot of orders there. So it went down and then tried the buyers tried to push. And now sellers are winning this because now the buyers cannot push this area. Okay. And when it hit this area, as you can see, okay, because resistance now becomes support. Now it becomes support. Now price bounce back to the other direction. That's it. That's all what price action is doing every time. Okay. So when you see such thing, okay, you are trapped here. Just look to your left. Where is the support? Price could go there, and maybe I can buy from here. Okay, I'll get my long position. Wait for that bullish engulfing. Okay, this is a bullish engulfing. Oh, you buy there. Stop loss beneath this candle or this support, and just target the next high. That's it. That's all about trade. That's it. That's all you have to do, my friends. Okay, don't need to complicate things. Support and resistance is the best price action confluence you can ever do. Always. So don't forget about those strategies. Okay, so higher risk to reward compared to chasing the breakouts. Okay, so those are the pullbacks, which we will see later on. Okay, now market structure and pull. So identify the higher highs and higher lows in an uptrend. Identify the lower highs and lower lows in the downtrend, and pullbacks usually occur at key support or resistance. So it's just like that. You see, there's a resistance there, there's a support there. Typical price action. So we all want to know how to enter and master this entry technique, huh? We will go on a live example as you will see later on. Okay. Now, the tools to spot the pullback. So moving averages, the 20 and the 50, which I have showed you. I'm using the 20 and the 50 now in our example. Fibonacci. Okay, I hope you didn't forget about the Fibonacci. We will use that. This is the Fibonacci retracement. Okay, from the lowest to the highest before the pullback. Okay, you will see this later on in action. What else? Um, the trend lines and the channels. Okay, trend lines, you already know that. And the candlestick formation, which you know about the engulfing candle, which is my favorite. What else? There's many others. Okay, we will go that later. I think the next slide will show you now. Okay, entry techniques. So enter on candlestick reversal patterns. So these are example of the candlestick reversal patterns, the double top. Why double top? Because there's one and two tops there is the double. So where is our entry? Just below this neckline. Once price breaks that neckline, you will put your short position there. Stop loss, okay, just midway that last price action there, that last leg, and target the next support below. And head and shoulders, the very famous one. When you see this price action head and shoulders, you will do the same, just like the double top. Okay, there's a rising wedge. So these are some of the examples of the or one of the famous reversal patterns. Okay, so the rising wedge, you will enter there. Once it breaks that channel or that trend line, stop loss above that, and then target whatever you fancy there. Okay, now we have this is the bearish, so this is the bullish, double bottom, just the reversal of that. Also an inverse head and shoulder, just inverse, same idea, and the falling wedge. Okay, so I hope you get to see this in action later on. Okay, then we will use some moving averages, bounces, and combine Fibonacci plus the support and resistance and wait for the confirmation before entering. That's it. That's all you need to do to know about entering these pullbacks later on. Okay. So moving on, risk management. Okay. Place stop loss beyond the last swing high and low, which we will show you later. Risk only 1 to 2% account per trade, which is I'm always reminding you, always risk 1 to 2%, because this will let you stay longer in the trading game, my friends. Okay. I know we all want to capitalize as much as possible, but we will, in time, with your patience and your passion in trading, you will reach there. You will reach the top. Okay. God willing, with all your, just like now, you are in attendance. Is there any new joiners? Johnson. Okay, welcome, Mr. Johnson, for joining. Who else? Okay. So always risk only 1 to 2% of your account. Okay, then aim for minimum 1 to 2 risk. Okay, you lose $10. Okay, but you will gain $20 if you will win that trade. Okay, because there's no why you will trade 1 is to 1. This is crazy. 1 is to 1 is nothing. At least 1 is to 2, or at least 1.5. Okay, 1 is to 1.5 risk to reward ratio. Okay, so you will always have some profit by the end of the day. So common mistakes. So it's entering too early before confirmation. Yes, because maybe you have seen one confluence. Okay, you've seen this candle breaking the EMA. It broke the EMA, and it's bullish or bearish. I want to enter for, because it's break the moving average. Yes, because I was like that before. When when I see this candle breaking the one moving average or two, I will enter without any more confirmation, because that's the most common mistake, as I have learned very well, after losing many times also. Using oversized lot sizes. Yes, you cannot, of course, the platform will not allow you to trade which your capital can allow, but you get what I mean. Okay, for example, in a $200 account, okay, your maximum lot size there is like 0.05 or 0.06. You try to put one lot, 0.10, and it will not allow you. It's not possible. So that's what I mean, and ignoring all the trend direction. Yes. If things are going up, why you are going to sell here? Do you think this is a no? Because they didn't give you, is breaking structure after the other. Okay, so always wait, because that, you see, this is the change of character, as we all know. Okay, this was the last law. It broke the structure. So this is change of character. This is the time to sell, and there's the crossover of your EMA. What more you need, my friends? Okay, this is just a simple analysis. Okay, there's your bearish engulfing. You see that? You see that bearish engulfing there? Yes, that's it. You place your sell positions there, stop loss above that bearish engulfing, or if your fund will allow, above that swing high, then target the what? Target the fresh support here. Malaysian SLR. Let's go. That's it. Okay, that's how you trade. Why you will trade? Okay, for example, you are here that time. Okay, why you will trade? There's nothing there. You need structure. I'm telling you, always need structure down there or up there. So if you are down here, now we have some structure here. These are all the fresh levels. This is a fresh. Why did the price went there? Because that's it. That's what gold wants. He needs structure, okay, to break all this. Maybe one day it will break this. Who knows? As we go later on in the example. Sorry, this is Euro USD. This is not gold. My bad. Sorry. But you get the idea. Okay? That's it, my friend. What secret sauce you want more me to tell you? Okay? What else? And trading every small retracement. Okay? Every small retracement. For example, this. Okay? It retraces up there. Okay? No, no, no. No, I want to sell now. No. And then you will jump here, and then once it's going up, you will jump, and then you will enter here. So no, that's not the way. Okay. So once it's respecting the EMA, then you hold your trade until you profit well. Here, down here. Why you are jumping around? I don't know because you are not mastering these skills. That's the problem. Okay, now we will master this, my friend. Okay, because that's what you need now: patience, mastering your patience, mastering these entries, which is very important. Okay. 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 Examples now: reviewing the Euro USD pullback trade, gold also pullback opportunities, and comparing successful and failed pullback. So let's do this now. Time is very fast. Now it's almost okay, it's past 7:30. Okay, about Algotur, as you all know, my friends, Algotur is a quantitatively driven trading company focusing on market making and multi-asset trading. Its expertise spans various asset classes, including futures, options, stocks, commodities, forex, and cryptocurrencies. Algotur is a quantitative trading service company with over 10 years of experience in strategy development, focusing on proprietary trading. And let all these numbers talk to you, okay? You can always read this in our Algotur website. Learn more about this amazing company. And also, please spread the word to your friends, to your families, okay? Just to get Algotur to the next level. Okay. So we also have copy trading, as you all know. Lets you automatically replicate the trades of expert traders in real time. When they buy, sell, your account does too. So without manual effort. So start with only $100. You can always contact our Algoter managers and they will gladly assist you any time of the day. So please, my friends, avail when you want this, to make money on the side. As you know, we are all busy. Sometimes you cannot just trade the whole day, as we all know. And this is one good way to, earn some money on the side. All right. And we also have some insurance program where if you end at a net loss, Algoter will reimburse your qualifying losses, keep 100% of any profits you make. Originally, this was $1,500, but now with only 500 minimum, you can now avail this no insurance program where there's a sweet spot here of $6,000 when you can have a return of investment of 26.79% with daily 2 to 5 signals. Okay, 24/7 trade support, complete trading guidance, and many more. So if you want to know more about this program, please contact our Algoter managers once again, and they will gladly assist you. Welcome to our new joiners, Jimmy. Hello, sir. Welcome to our webinar for tonight. What else? Okay. So I hope more will join, huh? So Zoe, as you all know, we always use Zoe to trade, and it's available in Google Play and App Store where you can trade on the go. So Zoe is a global financial technology company under the Zoe Group, headquartered in the United Kingdom with operational centers in Hong Kong and the United States. Specializing in CFD trading, Zoe offers a diverse range of financial products, including Forex, precious metals, oil, indices, and US shares. So Zoe is a fully regulated offering a secure professional trading experience with competitive fees, fast execution, and powerful tools to grow your investments confidently. This is also powered by TradingView, where you can get precise price action. All right, my friends. So if you have not installed this in your mobile devices, please do so now and trade extra more money, extra money. Okay. Lastly, our final, secret giveaway alert, 50% deposit bonus, where you can get $50 if you deposit 100, 250 for 500, and 500 if you deposit $1,000. So there's only five slots available. This could go fast. You can always contact our Algoter managers and they will assist you anytime. So I hope you will avail and spread the word also to your friends and family. Okay, my friends. And that's our end of the slide. And now we will go back to the chart. Okay. So Euro USD. So is there Euro USD? Euro USD. Okay, Euro USD. Okay, that's the symbol there. So typical Euro USD price action in the 5 minute time frame. Okay. So you can clearly see this is in a downtrend. Okay. It's in a downtrend. Now it's gone a lot of pips. You said, no, I've missed this. I'm FOMO there. I'm getting FOMO. Okay. FOMO vibes. I want to enter, but when? I don't know. Now we will know. Okay. So what you will do? Okay. You are just watching this price action play out. So what do you do, my friends? Okay, typically you will do this. Okay, you will sit in your hands and just watch price action until you see something, until you see something that's working for you. Okay, what you will do this. I know you are doing this. There. Now it's time to buy. Let's buy because it break past and the candle close above the 50 EMA. Okay, I want to buy. Nice, very nice. I want to buy there. Stop loss just below this price action here and target some high here. Okay, some swing high here. Let's see. Okay, going now, playing. Yes, I may be right over. See, I could be right. Oh no, I'm in a drawdown. Okay, speed things a little bit. Oh, please don't hit my stop loss. Please, please. There. Now you lost your trade. Because this is all you had. This is all you were looking at. Okay, you cannot wait. You are FOMO. You are having FOMO vibes. Oh, now I lost this trade. My God, what to do now? Okay, what to do now? Let's try again. Now, my friends, okay, when you see such thing, don't enter with just a small breakout there. Okay, even in a trend line. Okay, you put your trend line like this. Okay, there's a trend line. Okay, is that enough to enter? No, you need something, some more confluence. Okay, so never do that. Okay, that's what I was doing before. That's why I know this this thing here. Okay, now playing again. So what do you need? Anyone can answer me. What do we need if we want to enter uh, uh, the trade after this very long downtrend? What do we need to see? Crossover of EMA. Yes, that's one. What else? What do we need exactly, my friend? Think about our past lessons. Kochi, very good, Hygia. That's it, my friend. We need a change of character. Okay, for anyone who didn't know what's a Kochi, it means change of character. Okay, change of character. So playing now. So it's still going down. See, it's breaking structure after another. So this was the last lower low. It's broke again and made a new low. Okay, lower low, higher low, lower low. So it's still going down. Okay, for now, this was the last higher low. Okay, it needs to break this. It needs to break this higher low. Okay, playing now. Still going down. You see, now it's making these new lows. Okay, so you adjust this. Okay, this is now the new lower low. Where is the higher low? That's it. That's your range. Okay, there it break it. So it broke it. Okay, but let's see now. It needs a pullback. Okay, it needs a pullback. Where is my other indicator? Oh my God, I deleted it. Oh, wait. Trading sessions. Okay, that's it. Okay, now I have to adjust this again. Let's see what I can do. Show session names. Okay, delete this. Okay, Tokyo, Asia. Okay, it's blue and then this. New York is orange. My God, why Asia and London is the same? Okay, okay, London to be green. Okay, that's it. So let's see now the price action. Huh? Going, going. Okay, you see, it went down again. You see, it broke out, it means this is not the right higher low. It didn't respect this. So, if you will notice, this higher low is still not broken. It's still respected. Okay, so this is the one we need to break, not this. Okay, let's see. Price should go and break this. Okay, there it is. Now we have a true change of character. Okay, this is the change of character, my friends. That is the true change of character. Okay, finally it broke it. From this higher low, now we have a higher high. So where is that low now? This. This is our new low. Okay. Now, of course, the the next move should be a pullback. Okay, let's see. Now, if you will see here, okay, we have the moving averages. Now Fibonacci. The Fibonacci retracement. This. Okay. From the low to that high. Okay. It needs to go to the what? Golden zone, between 0.5 or and the 0.618 level. Okay. Let's see what will price action do now. Yeah, see, my friends, whenever there's a change of character, get your Fibonacci and do this, okay? Because it now needs to retrace back to the golden zone before we can enter. Let's play this. Okay, now it's going there. It's going to the 0.5. Hope you can see it, huh? Let's make it bigger. There, it swept the series 6.8. And what are we seeing? A doji candle, right? So, where is that? Okay, some reversal patterns, engulfing candles, falling, and this thing, etc. Okay, doji, it's also included there, the doji candle, because this is a reversal, because the sellers and the buyers are in, they're having the same amount of orders there being met, and price is not moving anywhere. That's why we have a very small body there of the candle. Okay, so. This is a doji. Let's see the other candle. Ah, it went up there. Okay. This could be really some bullish sentiment now. Let's see. Okay, it's still sweeping the 0.5. Okay, some red candles there, going there. There, okay, some bullish sentiment now. Okay, so this is the typical price action. See the wicks there, okay? Because the sellers and the buyers are still trying to fight over this, okay? Let's move on. If you will see, Some order receipt, more are going there. So the best way to do this, okay, because it once it entered the 0, 0.5 and the 0.61 A zone, okay, it means it is now the time to get your trades ready, because anything can do it. It can produce some green candles there, but though very small body, but eventually it's now producing these bigger ones. Okay, so if we will replay this, okay, now you will get your long position. Okay, enter there. Okay, but what's happening to my the 50 is there now, the 20 is gone. Hmm. The 20 is gone. Okay, let's make this 20. Okay, let's say like, okay. So it's below the 20 and the 50. Okay. So if we will enter there, okay, long position, there's a doji candle above that, stop loss just below this wick here. So it will protect you and target some swing high here. Okay. Fresh levels. We will not target this. This is nothing. We will target this. At least this one. Okay. And then hope everything is fine if we will play this out. Let's play it. Let's see. Will it hit our take profit? Let's see, my friends. Okay. There it is. It hit your TP. So those are the ways to enter the trade. Okay. What you did was you waited for the change of character, which we did. And then you took your Fibonacci, placed it on the lowest price action there before that to the highest there. Okay. After the change of character. And then you seeing some pullbacks there. Okay, it tried one time, but it went and initially went back to that golden zone between 0.5 and 0.618. And then you waited for that doji to appear. You entered there, and now the trade played out well. So how many confluence did you get, my friends? A lot, right? Compared to just basing your entry on the moving averages. Okay, that's it. And after that, you see they respected the 20, the 50. It's not closing body closing anymore on that 50 moving average. And once it gave this bullish candle there, the more it really confirms that this is going to be a bullish sentiment. So that's it, my friend. That's all you need to do, okay, to get that right entry every time, okay? So this pullback, this is now the pullback, mastering that pullback. This is the pullback we want, okay, from the downtrend to the uptrend, okay? Because you see, if you were just placing your trade like, it went past the Kochi there, okay? Now I want to enter because it gave this bullish engulfing candle. I will place my trade there and enter there and let's go. But now it stopped you because that's not the way to enter. Okay, so get your Fibonacci as the tool, one of the tools you need to use in this strategy, and then wait for some confirmation candles like this doji here. Okay, of course, my favorite is the bullish engulfing, but where did the bullish engulfing appear at this trade? Can you check? Where is that bullish engulfing? If we will only just base on the bullish engulfing, where is that? When did it happen? You say this? No. This is the bullish engulfing. This is the bullish engulfing. But now we are too highlighted, made the pullback there again. So the bullish engulfing is this one. Okay, after that pullback, the bullish engulfing, You can get this, okay? Place your trade there, okay? Stop loss. Now, for me, it's always 50 pips, okay? So I don't know how many pips is this, but for me, if just to trade blindly or just I will find the suitable swings here like this one, okay? Or just below this 50 moving average, okay? Somewhere, to protect you, and then you will target the highs, whatever is there. Okay, so that's your entry. For example, you missed entering on after this Asian session here. Did we enter here? No. The coaches. So here in London here, the beginning of London. Okay, somewhere around what time is this? That's 19 is 5 o'clock, right? No, no, 7 o'clock. So you enter 7 o'clock here and you can still capitalize going all the way up. So those are some ways, how to enter. Okay, you missed this one. Okay, because in our slide, okay, when it says there, I read something like bounce. Where is that? You see, use moving average bounces. Okay, so there's the bounce, my friend. There's the bounce. You see, there. It break all this moving average, and there's the bounce. So you can enter there. So you see, in trading, okay, there's a lot of confluence. Like some people will just use the trend line. For example, this is in the pullback. I'll make my trend line here. Okay, he will get his trend line there. Okay, these wicks touching all this. Whenever this breaks here, then he will put his trades there. After this candle finish, he will put his trades there because it broke the trend line, and he will enter there because it's above the moving averages. Okay, and then he will just put his stop loss there below that swing, and he will, capitalize on the way up again. So it's a lot of a strategy. Okay, but this is the typical. This is really the exact way to enter the trade like that. Okay, once there's a change of character, it's going for the pullback. You will get your Fibonacci retracement. Okay. See, it's always in that golden zone. Okay. And then find that doji there and then enter from there. That's it, my friend. Okay. Below that swing there and capitalize and let the trade play out. So that's example of the Euro USD. Is there any question you would like to ask me? If there's any, please do so now. It's always like that, my friend. Change of character. Okay. Once this happens, this is the end of the downtrend because it changes the character. Okay. Now we'll try gold now because it's time is now at a premium gold. Okay. Now, so again, it's in a downtrend. So we want a change of character, right? So let's see. Okay. Asia. Okay. So, you will mark your higher lows there. This is really the higher low. Okay. You know, typical Asian price actions going sideways. Okay. So this higher low, okay, is higher than this higher lows here. Okay, this is a higher low. This is also a higher low. This, okay, but as you can see, okay, if you will draw a straight line from this higher low here, okay, it means this is the time that this higher low was broken. That's it. That's the change of character there. That's it, my friends. Okay, or this one. This could be the one. Let's review, huh? Because we want to be very clear. Okay, this is also high. Okay, there's a pullback there. This is a high. Okay, and then there's a lower one here again, which is this one, because it created more lows here. This is the one, my friend. I'm really the see. We want to be clear. Huh? This is what happened. You see, if this was the higher, okay, these three candles here didn't successfully break this one and then make the more pullback. So this it created more lows here. Okay, so this is the one. Okay, now after that, it broke this. See, it's not about the candle. There's no body candle close up here. Okay, there's no body candle close. So it's just wicking. It's trying to really to stop this one. Okay, this higher low, they're trying to break this, but no, they are just weakening this, so it make created more lows here. So this is the what this is the most significant here. Okay, until it broke this one. So this is now the change of character. That's it. Okay. Now let's review. Okay. Now after that change of character, it's going for this pullback. There's always a pullback somewhere. Okay, it's going to target the what? Okay, a lot of things now because we discussed this already. Some fair value gaps. Okay, there's a fair value gap there. Let's see what this will do. Huh? Okay, now it inverts it. Okay, now it's going there. So what are you looking for? No, our typical bullish engulfing or some doji candles, whatever is going to come up here. Excuse me. Okay, you see, now when you see some wicks, it means there's really some support going on here. Okay, it cannot go lower. Okay, that's a doji. Okay, with some long wicks and a small body, that's also a doji. So this is also your confirmation now. Long position, long positions, stop loss beneath this last week here. Okay, that candle. Now target the what? Now, if gold drops significantly, okay, with a lot of pips here and a lot of structure form here, no, something we will target this easily. Target the New York high here as your take profit. Everything is set. Whatever. Okay, what is this? 3314 to 3312. That's 20 pips. No, you can go more. Okay, at least maybe below this this Asia low here. Okay, because this is in still like less than 50 pips. Okay, that should really protect you now. Let's play this out. All right, very good. The moving averages are have crossed, and now there's no way on earth this will go back to our stop loss. You see, my friend, just wait and wait for that very good take profit. You see, it hit your take profit easily because with all these fresh levels, okay, gold cannot, cannot stand this. It wants to break all these fresh levels here. That's why yesterday, this is the price action for gold, okay? Because for sure it went up. Okay, what else? What else? Okay, okay, let's go back. What is this, my friend? Falling wedge. Get your trend lines, okay, and just connect it there, okay? Because in the change of character, okay, it will fall there. See, only by this time it really made this change of character, breaking the trend line there, okay? Get the other trend line and connect all these lows. This low here, okay? That is the reversal pattern, my friend, as the falling wedge. You see, you will enter above that breakage there of the trend line, which we did here. We entered there. That's it. That's your confirmation entry. So there's a lot of ways for you, okay, to get to know when exactly to enter the trade. A lot of things, falling wedge, if it's in bullish sentiment, if you're waiting for that bullish sentiment to happen, watch out for that falling wedge like this. If it's a bearish sentiment, you wait for that rising wedge to happen, just like that, but reversed. And a lot of things, head and shoulder, double top. But in this example, it formed this falling wedge. Okay. And then exactly from there, you will enter and just ride this take profit to the moon. Okay, my friend. So a lot of things in trading, a lot of things. Okay. What else? Well, look at your other indicators. Okay. For this, when exactly is the crossover of that MACD? Here. Exactly on your entry there. It crossed over there in the MACD and also in the stochastic. It made the crossover there exactly in our entry. So it's all falling all together now. Okay, all this breakup structure, change of character. Okay, this reversal patterns. Okay, falling wedge. Enter there and just take the profit. Okay, that's all. That's mastering the pullback entries of the trades, my friend. So just master this, review this webinar again and again until you will master such things. So I hope you've learned again something new, some more secret sauce, and I hope more will join us again in our next webinar, my friends. Okay. So with that said, thank you once again for attending our webinar for tonight, and see you soon again next time to discuss more of our more strategies to reveal. Okay, my friends. So always do your best in your trading and manage your risk each and every time so you will not lose too much of your money. Okay, my friends. So until we meet again, thank you